Parth, we are good to go.
Thank you, Aman. A very good evening to all of you. Firstly, I should thank all of you for the wonderful response that we have got to this session, to this lecture series. I thank all the viewers. Today we are on the 15th session of this lecture series on back to basics on GST. My topic today is a bit different. I'm not going to speak on any technical topic, but I'm going to speak on the topic of GST implementation. And this can be looked at from two different perspectives. One, by a taxable person who is already registered, and if he wants to see what is the compliance or what is the level of GST implementation, has it been successful or not, or what are the necessary corrections that you might need to look into. And second is if someone wants to implement GST as a new entity or for the first time in their organization, what all care, what all precaution does one need to take? This is what we'll be discussing in today's session. So now, when we say GST, we have to understand that there are certain touch points which we have to take, which we have to look at by determining whether a GST. I'm just sorry. When we say GST, there are certain touch points which we need to look into, and those touch points are what? GST is a law which requires you to pay tax, and therefore to pay tax you are required to obtain registration. And therefore, first touch point for GST implementation would be obtaining tax registration. Second touch point would be the maintaining tax records, because it is based on those records that your liability will be assessed. It is based on those records that your claim of input tax credit will be justified and allowed. And therefore, tax records form an important part of GST implementation process. It is a very underrated topic, of course, but it is an important part. There are various penal consequences which you might be staring at if there is some non-compliance and the officer is a bit rigid during assessments or audits. So tax record is extremely important and an important aspect of analyzing or evaluating the success or failure of a particular GST implementation by any client. Third one would be tax liability, how you record your tax liability, what are the processes which you have set up in this entire process will be important. Same goes for tax credit, how do you account for tax credits? Whether you are ensuring particular precautions which are required, you are complying with the conditions and restrictions which are being prescribed under the law or not. What are the systems that you have put in place to check that? And lastly, payment of tax, again, that is also an important part of GST, and tax compliances, and lastly, tax assessments. So these are the 7 broad areas which we'll be touching upon today while understanding what is important in or while understanding how do you evaluate a GST implementation in an organization, or what points we need to take care of while implementing GST in any organization. We will be also focusing a bit on the system side. Wherever there is a system feasibility, we will talk about it. We can obviously I would love to have this session on an interactive mode. So if there are any questions in the middle of the session, I would request the audience to interject me, to stop me and ask. You can raise your hand, you can put it in the chat box and we will revert to it. Going straight to the first topic of ours is the tax registration. Now, friends, we all know that GST is a registration-based tax. And therefore, registration-based tax, it means that it's a state-based taxation also. So like we all know, there are 29 state GST Acts, we have Union Territory GST Act, and then we have Central GST Act and the IGST Act. So we need to be registered in all states from where we are obtaining, from where we have a business operation, so from where we intend to do business. So what is the first step you need to do is while evaluating or while implementing GST? Identify all the states from where you are operating on a particular date and ensure that you obtain registration certificate in that state. Now, please note that when I say this, it might also, you don't need to look at where you're providing service or where you're supplying goods. You don't have to look at either a ship to location or your supply to location. What you need to look at is what is your supply from location. Are you supplying any goods or services from that particular state? If yes, you are required to obtain registration. Therefore, you need to evaluate what all places you have offices, you've taken offices in India, and determine if there's a need to obtain registration. How do you do that? a simple option or or simple solution for this or way around or to identify this is to look at a rental expense. Identify for what all premises are you paying rent during the year. That will help you determining whether you have rightly obtained registration in the respective states where you are required to obtain registration or not. The second question which comes into my mind is that once if you are obtaining registration, let's say you have obtained registration in Maharashtra, the next question which comes into picture is whether all your offices in the state of Maharashtra are covered within the registration certificate or not. So GST law has two concepts. One is a place of business and second is additional place of business. So all places where we are storing goods or from where we are supplying services, they are required to be mentioned in the registration certificate, either as a principal base of business or as an additional base of business. So for example, many times we see traders, they have their own offices at office and then the goods are stored at a warehouse in Bhiwandi, let's say, or let's say in Nagpur or out of Maharashtra, Mumbai. You need to ensure that those warehouses, which are actually not in your possession, you only store goods there, and on your instruction, the warehouse keeper or the godown keeper dispatches the goods to your clients. Even all those locations have to be included in your additional base of business. You will need to obtain an NOC from your warehouse keeper, godown keeper, service provider that they have no objection to you obtaining registration. Okay, so please bear in mind that all locations from where you are operating are required to be included in your registration certificate. Next part which comes into play is whether all the particulars which are required to be disclosed in the registration certificate are updated or not. Now, what are the particulars which we are required to mention in the registration certificate? Apart from place of businesses, we are also required to mention the details of directors in case of a company or partners in case of a partnership firm. In same way, any other society, let's say if you are a society, all of your committee members or the core committee members, their details needs to be updated. And these particulars keep on changing. So we are required to check whether the particulars which are required to be given to the GST authorities are up to date or not. Similarly, there's a requirement to give your bank address, bank account details. Just ensure that the updated bank account details are mentioned there or not. Contact details of the company is correct. Let's say if there's a change in place of business of your office, you changed your office, you will have to inform the department that yes, I have changed my premises. Now my place of business is so and so. Please update in your records. Yeah. What happens if you don't update it? In service tax, we had a classic case that if I have taken a registration address, my registration certificate shows a particular address, and my invoice is shown to a different address. Let's say if today I take a registration, 5 months down the line I shift my office, but I don't update my service tax registration certificate particulars. The vendor issue invoice to the new address. It is not registered to the department. And in service tax, we had a lot of show cause notice saying that you have received services at an unregistered premises, so we will not allow this and credit. Of course, we have favorable judgments from the High Court and tribunal in service tax, but the dispute will continue on the GST also. So it's always better to be, better to take precaution than be sorry. This is one aspect we should bear in mind. Aman, please mute everyone except me. Aman? Yeah. This takes me to the next part. Similarly, when a company takes multiple registrations in a state, there are also times I would request everyone to kindly mute yourselves. Kiritji, please mute yourselves. Now, there can be also cases that, if you have taken registration, there is a cancellation there's a shutdown of office premises in a particular state. We also want to update those details, and in some cases, it might be happening that, all our operations in a particular state are discontinued. In such cases, we should apply for a cancellation of registration certificate. Once we apply for that, we have to make sure that we follow up with the officers, with the proper officer, that he approves our cancellation request. Now, applying for cancellation is not the only step, or is not the ultimate step. After your cancellation application is approved, firstly, you have to ensure that you have filed all the returns in the intervening period, meaning GSTR 1 and GSTR 3B. From the date of applying for cancellation to the date of approval of cancellation has to be filed. If you fail to file those returns, there will be a late fee which will be levied. And after you are receiving the cancellation certificate, you have to file a final return where you have to do some particular stock held or capital goods in stock on which you have claimed input tax credit. and if there is any requirement to reverse input tax credit under section 18(6) of the CGST Act or not. That is one more step you have to take care. If you fail to file final return, there is a late 10,000 rupees, 5,000 under CGST and 5,000 under SGST. Just 1 second, please. I'm really sorry for the interruption. So this is the one part on tax registration thing. Second part, I would like to inform you that, if you are a business who is wanting to claim refunds, you have to also do Aadhaar updation, Aadhaar verification of the authorized signatory and directors. You should also update your bank details, which I already mentioned earlier. This takes me to the next part of our discussion, outward supplies. Like I said, there are 7 T's which we have to look at while evaluating a GST implementation or implementing GST in an organization. The first one was registration. Now we move to the second part, which is the tax liability. And when we say tax liability, it emerges from, it is dependent on an outward supply which I make. That is why I say that, outward supply is a source of tax liability. And when we do this, there are different steps involved. And the first and most important step is to identify a customer. The business has to identify a customer. And while identifying a customer, there are some particulars which you are required to ensure that you collect of those customers. I'll come to that in some time. Second point is you have to obtain a sale order from that customer. A sale order which will define the commercial terms, like what is the value at which you're going to supply, the discounts and other recoveries, what tax you will charge, so that there is no subsequent dispute with the customer. Third action is that you prepare the invoice to the client when you actually supply the goods or services. There is a format which is prescribed under the GST law. You have to follow through while preparing the invoice. There is a compliance of e-invoicing and QR compliance, QR code. Then we have e-way bill compliances. When you are supplying goods to a customer, then you have to ensure that you are complying with the e-way bill provisions as applicable. After that, there are some post-supply events at times. Like there's a rejection of supply, or the customer disputes that I ordered 100 quantity, but I received only 90, or the rate difference quantity or the quality difference or something like that. And there can be post-supply events which have to be dealt with in a particular manner. There are cases where I supply with concessional rate goods, like say 5% for scientific research purpose. So in those cases, I have to obtain documentation from my customer. And lastly, post-supply compliances. And the most important is you have to ensure that you have realized the invoice process, means money. Wherever you have not received money, there can be 2 scenarios. The money not received is either from a domestic client or a foreign client. While in domestic client, there may not be a GST implication outrightly. In case of foreign clients, your export benefit claim may be challenged. So just bear this aspect in mind, even when you're implementing GST or evaluating your GST compliance from income side. How do you deal with those events? Now, when I go by one point, let us understand those things. Output supply, recipient details. Like I said, identify a customer. So once a customer is identified, you have to obtain the locational details of the client. One, you have to prepare a customer master, which will contain at least the following particulars: name, address, and GSTIN. Of course, your customer details will contain a lot of other details, but for GST perspective, these 3 is most important. Why? Because the GST law requires, that on an invoice you have to mention only these particulars. There will be other particulars for income tax. You might require to mention PAN. For your own accounting purpose, you would have included the bank details in your customer master and so on. But these 3 are the important parameters from GST perspective. Okay. Now, at many times, what happens is that you have a multi-locational client. Let's say a client who is in Gujarat and the same client is also in Maharashtra. So in case of multi-locational customer, you have to look at whether your systems, your software allows you to create multiple vendors or a multiple customer masters have to be created, or within the same customer market master, they have a sub customer master concept. So for example, in Tally, they don't allow you to have 2 addresses for the same customer. So you will create 2 different customers in your Tally, and maybe you might create a group for that customer under the Sunday address basket. But in SAP, there is an option of creating business-based concept. So one customer can have multiple business places, and that is allowed. So you have to look at what your software provides and how you have implemented. Why is this important? See, many times it might happen that your customer is multi-locational, but our sales team might not be that well versed. So just based on sales invoice, you would have said that, okay, this is from client, let's say ABC Limited, who is in 3 states. He will not go into detail that who is the actual recipient. And he might raise it to ABC Limited Gujarat, whereas the order would be from ABC Limited Maharashtra. Now here there is a mismatch of credit for ABC Limited because he would have booked it in a particular state. The credit is appearing in 2 of some different state. So the customer will not pay you. This will all result into dispute for you. Therefore, you have to ensure that the proper controls are there to identify, to create customer master, a GST and wise customer master. It can be either by creating different GST master like ABC Limited Gujarat, ABC Limited Maharashtra, or a sub master or a sub customer in the one customer. So you have to look at how your system allows. But this is an important aspect which you have to keep in mind while preparing invoices. Last requirement which you can see is that at any point of time, your system should be able to generate a customer list containing the name, address, and GST of the supplier. So if you look at the rules relating to accounts and records, there is a requirement which says that at any point of time, we should have a facility to generate this customer list. And that also includes for a supplier. So that if tomorrow, let's say there's an enforcement visit at your office, at your premises, the officers can ask you that give me a list of your customer. At that time, you might not be able to say that, sir, I have to prepare that list. Why? Because the rules say that you need to have a list readily available with you. Either if you are maintaining it physically separately in a Word file or something, it is fine, but that would not be updated every day. So it's always advisable that we have a report in our accounting system developed if possible that, at any point of time, we can generate by a click of a button, what is the list of my existing customers and their particulars, that is name, address, and GST. Then we go to output supply. We continue on the output supply part. Now let's say once we've created a customer master and we are in the process of creating order, but for creating a purchase order or sales order for the customer, we need to know what are we going to supply. It can be either goods or it can be service. And when we say we know that we are going to supply X number of goods and X number of and Y type of supplies, we need to create an item master in our books, in our systems, which will tag that, for this particular goods, this is the HSN, this is a classification, and this is the description which will come in my invoice. Same way, I will tag that what is the applicable GST rate on this product. Why? This will ensure firstly uniformity. If the HSN rate is not tagged to a product and every time the person has to manually update, there is always an element of scope for error remaining. Meaning instead of 18%, the person might end up creating an invoice for 12% GST or 5% GST. The customer will happily accept it, but 5 years later, when there is an assessment, the department will come back to you and say that you have charged less GST on your client. So you please pay the differential tax, which you will not get from your customer also. So having these small systems in place will be of much help to you in future also. Second requirement, which is very important, and I'll give you a live example which we are facing in one of our clients, is that you should also have an option that, your system should give an option to tag a transaction into different categories. Let's say if we are supplying to an EOU, which is deemed to be a deemed export, or I'm supplying to an SEZ unit, which is a zero date supply, or I'm selling a goods on high seas. The transaction should have a tagging that it's a high seas transaction, or it is a deemed export or zero date supply. Why? See, all these transactions attract benefit from government. For example, in case of deemed exports, whatever tax we pay on the export on supply to the EOU unit, that you can claim as a refund. Zero rated supplies, they are without tax transaction. And in those cases, clients will not reimburse the tax component to us. We have to claim the refund. The refund can be claimed by filing a separate manual application. And our GST systems are all automated. So if our systems don't give on a monthly basis and I throw out a result that these are the deemed exports which you have filed, and this does not go in my GSTR1 with flagging that this is a deemed export or this is a zero date supply, it might happen that every supply will be classified as a normal B2B transaction. And 2 years down the lane, when I go to file a refund claim, I'm not able to file an automated refund claim with the government. Now, when an automated refund claim is not filed, what will happen is that when I try to approach the officer, he will put his hands up saying that, see, you have to file a refund claim under this category. You have not filed. I don't care if the system is not allowing you, but I cannot give you refund. And you will end up in appeal. So this will just prolong your refund claim. Your money will get stuck. Secondly, in case of zero rated supplies, again, it is important to note that, zero rated supplies are not exempt. They are taxable supplies. They attract 5, 12, 18% tax. So, if you supplied zero rated supply, if you make a zero rated supply and they are not flagged as zero rated in your books, you might end up paying tax upfront, and then when you go to claim refund, the officer will not allow you. Same logic that you have not disclosed it as such in your GST 1 or 3B, and therefore I cannot allow you that refund. So this will just increase your problems. So this is one aspect which you should keep in mind. Secondly, supplies at lower rate. No, under GST, we also have a concept of supply at lower rate. So in this case, we have to ensure that whenever a particular customer is giving you order, let's say IIT, there should be an option under the customer master to identify that this is a customer who enjoys a lower rate of tax, and therefore the tax rate has to be lower. And perhaps a note on the invoice to that extent that yes, this is a concessional customer, so we are charging a lower rate of tax. Last and most important is to maintain stock records. Especially our SMA and MSME clients, we see many times that they have a note, or they say that we do not maintain stock records. Please note, it is mandatory to maintain stock records, whether you are a trader, manufacturer, service provider, works contractor, or agent, and we cannot shirk away from this responsibility which is cast on us by the law. Stock record, quantity details containing opening balance, purchases during the month, sales, wastage, everything has to be maintained by us and should be available at any point of time. What happens if we don't maintain? For example, let's say, what happens if we don't maintain it? If tomorrow there's an investigation at your premises and the officer finds that your stock worth is 50 lakhs on an assumption value, but your books show a stock of 80 lakhs, he will say that, okay, you have sold 30 lakh rupees worth of stock without a invoice, and therefore you will say that, okay, I will raise this demand from you. This is a clear challenge which we face. Therefore, it is very important that we maintain stock records and we ensure that these stock records which are there in our system are actually tying up with the corresponding actual physical record, physical stock which is lying at our warehouse or godown. If there is any mismatch, take corrective actions. You might have to write off some stocks and take that cost. But it is important that you keep this aspect in your mind. This takes me to the next point of invoicing. Now, when I'm raising an invoice, the first and foremost important thing is that I have to comply with the provisions of time of supply. What do we mean by time of supply? Friends, time of supply means when do you raise an invoice and when does a liability to make payment of tax arise. This is very important. Now, for goods, the law is very clear that your invoice has to be raised either before or at the time of supply of goods. Meaning post-delivery goods, you cannot raise invoice. It's a non-compliance. There can be a levy of penalty on you for delay in raising the invoice along with interest obligations. Same way for services, they have allowed you that you can raise either before or at the time of supply of invoice or after supply of invoice or after supply of service, but within 30 days. So this is two aspects which you need to keep in mind on a provision of services for a period of more than 3 months. Second point which we need to check is whether the documents which I am issuing, it contains the content which has been prescribed under the law. So there is a rule 46 which says that your invoice or any document which you generate under GST should contain specific particulars. Please make sure that your invoices are compliant with that provision. Your system should give those reports. One example for this would be, let's say I'm doing a zero rated supply, meaning I'm supplying to an SEZ without payment of tax. In that case, my goods, I'm sending goods worth rupees 100, which are taxable in general at 18%. So my invoice should declare on its face that the tax applicable on this supply is 18%, 18 rupees GST is payable. But since I'm making a zero rated supply without payment of tax, I'm not collecting GST from my clients and I'm not paying to the government. But declaration of the tax amount on the invoice is compulsory, even when it's a zero invoice for export of goods or service or supply of goods or service to SEZ unit. Please bear this aspect in mind. Similarly, when I say invoicing, we also look at credit notes and debit notes. What is credit note first? Credit note is a document by which you intend to reduce the value of your supply. Let's say initially I made a supply of goods worth 100 to my client, but afterwards, due to whatever reason, I want to reduce the amount that I have to pay him, but that I have to receive from him by 20 rupees. Now, firstly, you have to check is whether this 20 rupees reduction, is it allowable under the GST laws or GST deductible or not? For that, you have to look at what is the reason for issuing the credit note. Now, there can be some reasons which are allowable, some reasons which are not allowable. So we also need to ensure that our systems are geared up to understand that, to ensure and to accept, to understand that and to implement that logic. So for example, if it's a cash discount, post supply discount, it is not an allowable GST deductible. So I cannot do a reversal or a credit note with GST and claim deduction in my GSTR1 and GSTR3B returns. So that particular systems need to be in place, because that's, for God forbid, and if there's a larger credit note, big amount credit note which you take as GST deductible, in future it is possible that it will be challenged and you might be required to pay back the GST amount again to the government with interest. This is one aspect which you have to keep bear in mind while doing credit notes. Second, time barring. We all know there's a time limit by before which you have to issue a credit note in respect of an invoice. What is the system allowable? Does the system have an option to tag a particular credit note with the corresponding invoice? And if that system option is available, does the system itself say that yes, this is a GST deductible credit note or it's a GST non-deductible credit note? How do you implement that? Please make sure that these facilities are available in your systems. If not available, in future, it will be a possibility that an officer will ask you, how is it deductible? And then if you're not able to answer that properly, we might end up with a notice saying that you have claimed the wrong deduction, please pay back the amount. Second, next part is invoicing compliance. As we all know, invoicing is now becoming will soon get an universal application. It started with 500 crores upper limit, reduced to 100, 50, 20. And now with 1st October, even SSCs having turnover more than 10 crores are required to comply with invoicing. So you have to ensure that all the invoices that I'm issuing are invoicing compliant or not. I have generated the IRN or not. And more important than generation of IRN, you have to ensure that how are you keeping a track of IRN in your systems? Is the data of IRN coming back to your system? Are they incorporated in your Tally and SAP so that if in future there's like where you can always give them the report which is generated from our SAP or Tally, or do we have to maintain it manually? Please note, as long as we have a manual intervention involved, the chances of the risk of committing an error becomes much more. So it is always better that we have a system that which captures the data, which sources the data from the IRN portal or the intermediary and stores it in our accounting software so that it is available to us always. Same way, e-way bill. Now, e-way bill is to be prepared in case of supply of goods. We have to ensure that, and I'm sure we are preparing that. But now in some cases, we might not be preparing because let's say that it's an Xbox delivery. The client takes delivery from our location. And it might not be available in our system because let's say if we go and say that why is this e-way bill not prepared against this invoice? We need to have some record in our system to say that yes, this is because it was an Xbox delivery or the transporter was preparing the e-way bill, something like that. That tracking has to be there in our systems because we all have seen in some cases notice comes saying that your turnover is let's say 1 lakh rupees, but you have prepared e-way bill on 50,000. Explain the difference. So then we have to say that okay, that we have to explain them that okay, it was Xbox transaction. How do we get it available immediately to us? By having those data in our accounting systems. Okay, this takes me to the next part, accounting of tax liability. So first of all, we have to have a proper set of GL where the tax GL will be captured. Whenever we prepare an invoice, there be credit the tax liability GL. So there has to be a tax liability GL in your accounting system. And our advice would be that you please do not create multiple tax liability GL. Just keep one GL for each tax head. Say CGST payable, SGST payable, and IGST payable. Please don't prepare separate accounting, GST GLs or accounts for a different transaction type. Let's say IGST 5% separate, IGST 12% separate, IGST 18% separate. Please don't do it. Your tax code in your systems will handle those identification marks, give it in your reports. Creating as you create multiple tax GLs, your only compliances will increase, your reconciliation points will increase. Do not create multiple GLs. Second part is the accounting policy for zero rated supply, which is again very important. If you are exporting any supply goods or services on payment of GST, you are accepting a liability on your head, though you might not be collecting the money from your customer. In these cases, you have to account for the GST which you are required to pay and ultimately which you are entitled to claim refund. So, for example, if today I am preparing an invoice for export of goods on payment of GST, let's say worth rupees 10 lakhs, those goods attract 18% GST. So, when I prepare the sales invoice, I will have to create a tax code which is a export with payment 18%. So the system should automatically say that, okay, in backend, I will pass an entry which will say GST refund receivable 1,80,000 and IGST payable credit 1,80,000. So when I'm filing my GST returns, I will know that yes, I have to pay this amount. What happens is that if we do not have that system at times while filing GSTR1 or GSTR3B, we end up or we fail to disclose those transactions in our GSTR1 and GSTR3B as exports with payment. We end up disclosing it as export without payment. And now then 5 months down the line, there will be a notice saying that your GSTR1 said or your customs record says you exported with payment, but there is no corresponding payment in your GSTR1 or GSTR3B. So please make this payment first. So bear this aspect in mind. Next is whether proper accounting is done. Merely crediting GST liability is not sufficient. At the end of each month, you have to ensure that whenever I file my GSTR3B, whether I am properly knocking off the GST liability GL against the credits or against the payment GLs or not. Because if we don't do at the time, let's say it's possible that when an assessment takes place or investigation takes place, they will say that as per your books on this day, you have a GST liability of 50,000 or 50 lakh rupees. You will say, why is it payable? So you're not paid it, you just say that and he will force you to pay it. And then once some non-compliance is found or something mismatch is found, it's big. While it can be explainable, at times officers also act rigid and they might not want to accept it because then they're because they would also want to show some collection on their part during those proceedings. So it's always better that we are prepared and ensure that the proper accounting is done. Make sure that by 20th of next month, the GST liability GL, the payable amount should become 0. So for 31st March, by 20th April, your GST liability amount should be 0, except for April invoices raised during 1st April to 20th April. That should be the policy each company should implement. Next, whether this is what we discussed. Last, whether appropriate reports are generated by systems, again, depending on how you account whether the reports are appropriately generated by the system. See, why I'm asking this question is because, if the appropriate reports are not generated, many times we find that, clients end up doing a lot of manual processes, a lot of Excel data processing is done. While it is not something which is wrong, but as we increase the number of manual intervention in the processes, the level of the scope for an error increases. Therefore, to the extent possible, we have to ensure that our compliance gets automated, or at least the basic reports or the basic data which we want for compliance is automatically coming in a proper format so that it is easy to comply with less errors. This takes me to the next part of tax liability. What we discussed till now was the tax liability on output supply. Now we'll go to tax liability on reverse charge. Okay, now reverse charge, we know there are two types of reverse charge. One where supplier is registered and charges you, are registered, but you are required to pay tax on reverse charge, like transporters, sponsorship services and so. And second is where the supplier is unregistered and you are required to pay tax on reverse charge, like a residential housing rent, which has now come up, or even in transportation also there's an option available for them. In those cases, our advice would be that still, whenever you are receiving supplies from vendors where the tax is payable on reverse charge, yet you should update the customer master base and ensure the GSTN is mentioned in our custom supplier master, so that whenever you cross-check with GST 2A or 2B, there is no mismatch. Many times we find that clients receive notice saying that your supplier have disclosed that they have made supplies to you on which tax is payable under reverse charge, but you have not paid tax correctly. So to have that reconciliation available with us at any point of time, it is advisable that we have that system in our place. Reverse charge, second important point is accounting of reverse charge liability, especially some small clients or some clients, we find that they do not account a reverse charge on a transaction level basis. Instead, they merely just book the payment entry directly in their input tax credit ledger. That may not be correct. Please, whenever you are booking an expense on which tax is payable under reverse charge, you should also book the liability and corresponding expense and corresponding credits or expense if it's ineligible for credit. This will ensure that you always have a data available with you, reports available with you. Passing a single entry will not give you the backend details, and it will be difficult for you only in future to correlate that against what transactions have you actually paid the RCM liability. Second point in case of time of supply is in case of reverse charge mechanism is a time of supply compliances. Now in reverse charge has a specific set of time of supply rules. You have to pay the liability within specified time, and if you don't pay, there is an interest liability on you. So what is the practices or what is the process that you have implemented for ensuring this compliance is what you have to check it, whether your system itself throws out an error when you are filing a, or when you're booking an expense where the time of supply has lapsed. Let's say an invoice dated 1st April 2022. If you were to account it on today, whether your system will say that no, this is a wrong, you should not pass this entry, you should ask the vendor to change the invoice, or it allows you to do the booking without any rectification. Because if it's a second point, then you might end up missing to pay the interest liability on those compliances, on those liability, and in future the officers can come back to you and demand that, and there might be some penal consequences also. This is one aspect which you should bear in mind. Again, corresponding RCM eligibility. Like I said, whenever you are booking a RCM liability, also determine the corresponding RCM eligibility. If you are eligible for a credit, just pass the entry in your ITC ledger. If it is not, expense it out directly. Please do not delay it. Like I said, accounting for RCM, liability and credit both is a pain area in many of the clients which we see. Please take care of it. Next is the associated documentary compliances. In case of reverse charge transactions, we are also required to do a self-invoicing and a payment voucher. Is your system geared up to give that? You might not be generating it on daily basis, but if tomorrow there is an officer who's come back, who's come to your office, and he asks you that I want to see the self-invoice, your system should be in a position to generate that self-invoice on that very day by clicking a button. It's like getting a tele voucher, but it should meet the criteria also which is prescribed. It should be alphanumeric and all. So is your system geared up to accept to do that is what you should check. This takes into some other aspects of outward supply. The last part, if there is a case where you are supplying capital goods, meaning you have purchased some fixed asset which you are now wanting to sell, you have to say, is your system geared up to capture the tax liability? Are you analyzing the input tax credit implication of a supply of capital goods? There is a valuation mechanism. If you are selling a capital goods on which you are claimed input tax credit, you have to ensure that when you are selling those those capital goods, there is some minimum value at which you have to pay the tax on those supply. And last, thirdly, how does the system identify buyback transactions? In case of buyback transaction, the value which is reduced because of some material which you are giving is deemed to be an outward supply by you, and you are also required to raise an invoice to your vendor, and the vendor will raise you an invoice to you for gross amount. So make sure that the buyback transactions are also identifiable in your system. So let's say if there's a reduction in FA register, you should check that is a reduction on account of buyback transaction, and if yes, you might be required to raise an invoice to your vendor. This will take me to the next part of today's tax of GST, which is the tax credit. And firstly, we discuss the tax credit accounting. Again, important. The first step important in tax credit accounting is identifying eligible and ineligible credit. Whether your system is geared up to say that, okay, this particular set of expenses or any credit which is booked into this expense head will go straight into my expense, it's ineligible or not. It is very important, because if there is no control on that part, you will end up taking every credit in your books, in your ITC ledger, and then when you are filing your GST RCB on a monthly basis, you will have to go and look at every transaction, identify if it's eligible or not. And let's say if you miss out doing that, or if you miss out any one transaction a month, during audits again it will be pointed out by the officers, and you will have to end up paying it along with interest and penalty. So identifying eligible or ineligibility, having systems in place to identify that eligibility factor at the time of passing the entry is very important. Please check whether your systems have that, and if not, can we incorporate that. Second part is identifying the input tax credit component when someone is claiming a reimbursement from you. Now we have many times our employees who are traveling across India, they incur the expense out of their cash and then they claim reimbursement from the company. Now, do we have a system in place to identify wherever eligible input tax credit we can claim? And if yes, how are we claiming? How are we doing? Are we claiming it in the name of? And because if we are claiming, we also have to incorporate the GST number of the supplier, the ultimate supplier. So what is the system in place that we have implemented here? Is one thing you need to look at. Secondly, customs house agent. If you are an importer of goods or exporter, there will be a CH agent who will be raising you invoice on regular basis. The CH agent's invoice will comprise of two components. One is the basic, and the second is the reimbursement. How are you claiming credit on the reimbursement component? Please have a system in place. Otherwise, you might be ending up in losing a lot of credits. Now, when I say this, what is important, why I'm highlighting this is because, the ultimate service providers, let's say the shipping line or the local vendors, they might not be your vendors. So they might not be appearing in your system. So when you're filing GST at 2B or GST at 3B and trying to do a reconciliation, you will find that they are appearing in my 2B, but I'm not able to see them in my purchase register. And there is a mismatch. This is one aspect which you should keep in mind. Thirdly, does your system have any facility to give out reports of Rule 37 reversal and recredit? Rule 37 requires that we reverse the credit if not paid to the vendor within a specified time. So there is a reversal requirement and there's a recredit. Is the tracking of this manually done, or your system is geared up to capture that? Is something which we should look at. Fourth part, capital goods. We should have a system which says that, if a capital goods is capitalized, the ITC component, then no credit should be claimed by us, and vice versa. We have to ensure that if we have claimed a credit somewhere, there is no corresponding capitalization of the same component. Last, matching of input tax credit and accounting. Now, as we all know, from 1st January 2022, it is mandatory that we have to claim input tax credit only on the basis of 100% matching. The option of Rule 36(4), which give 5% buffer, is no longer applicable. So we have to claim only matched credits. So there is to be a system in your books of accounts, or in your, that you pass an entry saying that, okay, in a particular month, I have booked credit of 100 rupees, but only 60 rupees is matching. So 40 rupees I will transfer to a deferred account or unmatched account, and I will account for it properly, so that there is a proper matching at the end of the month. When I look at my GST at 3B, my 3B and GST and books will match. If you do not pass these entries, what will happen is your electronic credit ledger portal will show a different amount, and your books will always show a higher amount or a mismatch between the two. And whenever there is audits, and even during stat audits, we see that clients face this challenge. So it is always advisable that if you are having mismatches, you account for those mismatches separately, you transfer it to a different account. And as and when there is a matching, subsequent matching, you can reclaim the credit and you can bring that amount back from the suspense or different account to a regular ITC account. This way, your electronic credit ledger balance will always match with the books of accounts. Now, what we talked about here was the concept of accounting of credit. The next important part is actually claiming of credit. Merely accounting a credit in books of accounts is not sufficient. You also have to claim the credit in your GST at 3B. And the first thing that we need to ensure is that the credit that we are claiming in GST at 3B is within the appropriate time limit, which is the September of the next financial year. Are we complying with that? Are we having a check on this? This check with most probability will be a manual exercise. So are we putting in place a system to check this? Is there a maker checker concept for your GST at 3B claiming process is what you can look at. And second, documentation to support claim of ITC. Do we have all the invoices? At times we see many times clients say that, you just claim the credit, we will book the invoice later. And at times that later never happens. And so when filing GST at 99C, we've identified that GST at 3B is showing 1 lakh rupees of credit, and your books are actually showing only 50,000 credit. So is there a system in place to ensure that those scenarios does not come up is what we need to check. Lastly, what is the system that you have in your organization to follow up with defaulting vendors? If you have unmatched credit, you have deferred because they have not filed the GSTR 1. What is the follow-up within the organization is what you can check, and you need to check, because at times the amounts may be substantial. We have already received a lot of clients GST 3B2A notices, mismatch notices, and in some cases the demands have been confirmed. We are in appeals. So this is one exercise which we all need to implement, at least for moving forward in all our clients. Having discussed tax liability, tax credits, we go next to the concept of tax payment. And tax payment, as we all know, is a monthly exercise. Every month we have to file GSTR 1 and GSTR 3B. Your GSTR 1 is a determination of output liability, which goes into GSTR 3B. And in GSTR 3B, you give your ITC data, RCM and all. What is the process involved is important to understand here. Analyze your processes. And again, I will go back to my earlier statement. Ensure that there is minimal manual intervention in this process. To the extent possible, the reports should come from our book systems. There should be in-house systems which gives us report, so that the scope of error comes down and there is uniformity in the process. Again, it should be a monthly exercise within an organization that you reconcile your balances in books versus portal. Like I said, your GST portal will contain your electronic credit ledger balance, electronic cash balance. and that amount can be compared with your corresponding balances in your books of accounts. If there is any reconciliation, identify the reasons for reconciliation, and any unreconciled differences might need corrective action. At times, you will also find that there is an accumulation of balance in electronic credit ledger, accumulation of balance in electronic cash ledger. You might need to look at why is there an accumulation. Let's say if I have an exporter, I have a person who is exporting, who is saying 50% of exports, and I do exports without payment of tax, then I will have substantial balance in my cash credit ledger. So then I will have to take an exercise of filing a refund application and go for refund of the credit balance which is lying in my credit ledger. So that to understand that exercise, we have to analyze our balances in the credit ledger, why that balances are accumulating, so that the corrective action can be taken. Same way, if I have a balance in cash ledger which is accumulated for a long time, that is a worry. It's as a point of concern, because why do I keep my money in cash ledger if I'm not going to utilize it? It's better that I claim refund and actually put it in a deposit which will give me some interest. If I'm depositing some amount in cash ledger and not utilizing it, the government is not going to give me any interest. So why to park funds there, whereas we can always get interested or invest it in some better options. So this is one important aspect which we should keep in mind. This takes me to the next part of tax compliances, filing of GST returns 13B. Like I said, analyze, evaluate your process involved, what is the level of automation in your systems, and what is the manual intervention. Minimal manual intervention is the key to have a successful GST implementation, to have a safe, a proper GST compliances. Check your compliance statuses. Are you filing GST 1 and 3B in time? Are the returns filed saved in your software or in your databases? Because at times we have seen in cases of clients that after filing GST 3B, on the next day some other data is appearing in my GST 3B. If I look at on the portal, so if we have a filed data available with me physically, it is always a safety feature. We can always see that no, I have filed a GST 3B with these details, and what the portal is doing is incorrect. It is very rare it happens, but there are sometimes glitches in the portal, so we should bear this aspect in mind. We should also look at whether we are complying with other aspects of the GST law. If we are sending goods on job work, we have to file our ITC 02. Whether we are filing that. If I have taken an ISD registration, I have to distribute the GST credit to my receiving locations. Am I doing that on a regular basis? Are the receiving locations claiming ITC correctly? Is what we need to check. You are also required to file your annual returns. Have you filed all your annual returns? If yes, good. If no, why? And to analyze how you will file the annual returns, what is the level of automation involved. Again, annual returns is a detailed exercise involving a summary of your entire GSTR 1, GSTR 3B, and a detailed line level reconciliation of what is there in your books of accounts and your GST returns. And there may be cases of mismatch. You might require to pay up dues, identify them and pay them in the GST returns itself. Now, when I talk about annual returns, one important aspect which I should talk upon is that in case of multi-locational clients, if you're planning to implement a new accounting software, for example, please ensure that you have a registration level trial balance coming out of your system. You need to have a registration level trial balance coming out of your system. This will ensure that whenever an audit comes to your place, though you can strongly say to the client or to the officer that I have a registration level trial balance. Please don't look at the larger picture. Only look at the registration which is relevant to you. This takes me to the last slide of my today's discussion: tax assessment. In GST, as the registration increases, there are also a lot of litigation. Different types of notices are coming to taxpayers. The first question you have to ensure is whether you are maintaining a litigation tracker in your organization, and a track of litigation is required. And when you do a litigation tracker, for that you are also required to periodically verify the notices which are issued under GST, whether those notices are responded in time to your clients, what are the proceedings, at what stage those proceedings are pending today. If you have filed an appeal, whether the appeal has been filed within time, how have you made the pre-deposit. Again, pre-deposit at time, I will point it out to you. It has to be paid compulsory by cash ledger. There is a judgment of the Allahabad High Court in Jyoti Construction which says that pre-deposit has to be paid by cash ledger only. So if there are any ongoing litigations and if you have paid pre-deposit by credit ledger, there might be some challenges. Identifying what corrective actions you can take needs to be taken. That's all from my side. I think we will move on to the audience. If we have any queries, I would love to take those. I would love to love for your feedback on any queries that we have. Aman, can we unmute the audience if anyone has any query? Okay. I thank you all for attending to this session. I look forward to see you all again next Tuesday when I will be speaking on the next topic of litigation. Thank you very much. Have a wonderful Ganesh Chaturthi wishes to all of you. Thank you.